It was a challenging first half of the year for deal making. U.S. M&A volume falling 8% in the second quarter and 50% year over year, according to KPMG. But AI startups proved to be a bright spot, and that's the focus of today's Tech Check with Deirdre Bosa. Hi, Dee.
Good morning, guys. Well, as you heard from Steve Kovac earlier, tech came roaring back this year, but it wasn't just public markets and the Nasdaq's huge outperformance. Early stage startups, the potential next generation of tech companies, they also found a renewed financing landscape for the right kind of company. Now, overall, the cadence of venture capital investing was slower and more cautious. Late stage companies like Instacart and Stripe, they took valuation haircuts over the last year or so. But startups in the generative AI space, they found a much friendlier environment. According to PitchBook, there are now more than 20 generative AI unicorns or startups valued at $1 billion or more. The biggest rounds this year went to Inflection, Anthropic, Generative Biomedicines, and Adept, all $300 million plus fundraisers. Now, on Friday, I spoke to Reid Hoffman, a well-known VC that has backed a lot of the biggest names in this space, including OpenAI and Inflection, which he actually helped to co-found. So I asked him what is next for the biggest generative AI companies, and is it inevitable that they get gobbled up by one of the mega caps? Have a listen.
If their AI business is one of the ones that requires a large-scale compute, almost for sure they'll have to be using one of the cloud providers. Now, while Microsoft has taken kind of an early lead in building this out, Google's obviously very strong. Amazon's working on it. Oracle is working on it. There's a whole stack. And so I think that enables an ecosystem. And once you have, one of the things about the discussion of large tech companies is I think we're, 7 large tech companies heading to 10, not to 3. And so that gives you the competitive space for startups to play. And that's one of the things that I think, even if they go, okay, I have to go rent large computer from company X, they have a number of options. And that means that it's out there, priced well, all the benefits you get of competition.
Big checks for generative AI startups. It hasn't only been for VCs either. Big tech has been extremely active. And guys, it's not unusual to see rivals like Microsoft and Google invest in the same one. M&A is a trickier question, as we saw with Microsoft and OpenAI. That's a deal that, if it was a straight-up acquisition, likely wouldn't be approved by the authorities, by the regulators, but there are certain ways around it. So you may see more partnerships, but on different levels, the likes of IBM as well as Databricks. They are actively making these sort of big deals.
Dee, when it comes to the M&A question, what specifically would the big companies mostly be buying? Is it strictly, engineering know-how? Is it a sort of better mousetrap in terms of training AI?
Probably all of the above, and probably use cases as well, Mike, that we don't even know of yet, right? There are so many, like I said, more than 20 generative AI startups that are valued at $1 billion or more. We don't really know all the use cases yet because this is only, less than 8 months fresh. So that's being developed. The apps on top of this, the infrastructure for this new platform shift. So they are getting in early, right, to see maybe if they have the option or maybe the idea, the talent, as you said, to continue to develop in this space.
Dee, you mentioned that a little bit more friendly environment for these types of unicorns or these types of startup companies. They're not, our VCs and the other funders not looking for as stringent requirements when it comes to profitability. They're being a little more lax there. What did you mean by that?
Great question. Great question, because at the late stage and certainly in public markets, we've seen this shift for looking towards profitability, but I would say that no rules in the earliest stages, right? There was a company that was valued at $1 billion with 0 revenue. So forget profitability, Courtney, but there wasn't even any revenue. So it's not all that unusual. This is really sort of this gold rush. And if you have a model, I have to say, too, there's a lot of folks talking about a bubble because you will see a lot of companies getting a lot of investment that essentially do the same thing. So we have this question once again, similar to 2021. Is it a product, or is it a feature, or is it a platform? Everyone obviously wants to be a platform, but that's not clear yet in many of these cases.
It's very fascinating. I can't wait to see what AI will do. Hopefully more good than bad, but I know there's a lot of questions about that too. Dee, thank you so much. Well, coming up next, Treasury Secretary Janet Yellen traveling to China this week. Big economic implications at stake. It follows a number of high-profile U.S. CEOs who have made the trip this year as well. More details after the break.